Is the AI bubble about to burst?
OpenAI just closed $110 billion in fresh funding this morning. Yet both Amazon and Nvidia, two of the biggest backers in this round, they're down, or we'll call it flat today. The market kind of just shrugged it off.
So before we proceed, what is a bubble? Before we talk about AI, we need to actually define what a bubble actually is. A bubble is a market condition where prices of assets, whether houses, stocks, or tech companies, get pushed far beyond their real value. Because people are buying not for earnings or profits, but because they expect that someone else will pay even more later. And when expectations are not met, the bubble inflates, and eventually reality catches up. The air goes out and prices fall. So what bursts in a bubble is speculations, not technology itself. True innovations rise, but weak idea and fragile business model don't. So everyone in tech and finance is asking the same question right now. AI stocks are soaring and tech companies are spending trillions. And every day, developers on Reddit are worried about their careers. But what is really happening beneath the headlines? Tech workers and remote workers are mixing anxiety with ambiguity. On Reddit, many discuss whether the AI bubble will burst. And if it does, what does it mean for jobs, companies, and labor market? Some predict massive layoff as hype-driven companies fail. Others argue that the AI usage won't disappear. It might just recalibrate to focus on practical and sustainable applications. One common theme: even if the AI bubble pop itself, AI will not vanish. It will simply shapeshift, just like what happened in the dot-com crash, when the internet stayed and eventually thrived. Here are where things get interesting. First, the case for a bubble. Experts warn that the AI bubble exhibits classic bubble traits: heavy speculations, high-rise valuations, and massive capital inflows. Some even describe the surge as planet-sized in scale compared to historical bubbles. So now this is the case against the bubble. So not everyone agrees this is a bubble, at least not yet. Top economists told Fortune that the AI market doesn't meet all the classic criteria for a bubble because smart money like company insiders aren't existing. Instead, stock buybacks are reducing public float. In past bubbles, widespread of equity issuance was an early signal of excess, and that hasn't happened yet. This suggests we might be in a boom, but not a classic madness-driven bubble, at least not yet. Now, the Guardian's perspective, the opportunity of the outpost. In Guardians, tech thinkers point out that past bubbles ultimately produce better foundation for technology. Internet survived, evolved, and reshaped the world. So the argument today is similar. If the AI bubble does pop, the fallout might clear out hype-driven ventures with sky-high valuation and leave room for meaningful human-centered innovation. So this will be less about destruction and more about transformation. So what are the economic risks beyond tech? If AI prices collapses, it could ripple broader into economic challenges, weaker markets, layoffs beyond tech, and slower growth. So the economic watchdogs like OECD have flagged AI as a downside risk to growth if exuberance turns into contraction. But because the capital invested is often directed into infrastructure rather than purely speculative assets, so analysts believe that the bust may have less systematic impact like the financial crash of the past. Job, people, and human impact. Real people are the heart of this story. Developers worry about layoffs, students fear about entering a saturated job market. Others see opportunities in mastering AI tools, arguing that the collapse of fluff products could create space for real skills and meaningful work. So no matter how this unfolds, the future of work is not just tech issue. It's human story about adaptation, learning, and survival. So maybe the real question isn't will AI bust, but rather who survive, what gets built after the hype fades away. Because technology doesn't disappear with a market correction. It evolves, and the next era will not be shaped by speculations, but by sustainable value creation. If this changes how you think of AI, the full video is on my YouTube channel. Link in the bio.